Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more. Well, hello, good morning, and welcome everyone to the AgYield War Room. I am, if you don't know me, I am AgYield's marketing manager and everyone's favorite backup host, Jack Coakley, filling in for Dan today. It is a tropical Tuesday, January 21st. It is -5 degrees outside today. But don't worry, in my neck of the woods, it feels like -24. So that's why I'm home today. This is actually the first time I've hosted from the home office. I had to take down a small shrine I made to Dan over here, with photos I've collected of him over the ages. So anyway, enough about my home setup. Feel free to join the discussion. Post a comment, email us at info@agyield.com. We'd love to hear about people who are tuning in, and we'll be happy to answer any questions you may have. Enough yammering from me. Let's shoot it over to Ryland for the overnight numbers.
Yeah, thanks, Jack. Well, we got March corn up 3 3/4. March beans leading the charge up 21.5 overnight, and March wheat up 9 3/4. So definitely some greenery on the scenery to start the week here.
Love to hear it, Ben. You already have an inquisitive posture, so I know you got at least 15 to 20 minutes of things to say. So let's cue you up for that.
I think that it's markets are a little volatile across the whole commodity equity spectrum. We're going to digest a bunch of executive orders signed by our new president over the next couple of days. As far as grains go, you look at soybeans now, which has been kind of the whipping post in the grains, and they're $1 off their lows. We had a really good test on Thursday and Friday of the 100-day moving average. And over the weekend, I think there's some concerns now in South America. There's reports of not super widespread, reports of some problems because of too much moisture in Brazil, kind of dry in Argentina still. It looks like that's going to improve a little. If you go back to a year like 2016, that's the kind of one that comes to mind. I'm not a big analogous year guy, but that was a year that we really beat soybeans up, and then it got wet when we got into harvest. So I think they're worth watching. And it's interesting to note also that a very profitable short position that the funds had on in soybeans, and they used that time down there sub $10, just slowly covered their positions. It's kind of asymptomatic of how they normally trade, which is get pushed in and get pushed out. So they were buyers down there, much like they did in corn. This morning, we've got beans up 20 cents. And I think that there's some concerns that next slug of beans that are going to hit the global market are not going to be quite as burdensome as previously thought. So, that with money flows, we saw the dollar have a really wild day yesterday. It broke down hard underneath its trend that it had been kind of obeying on the way up. At one point, I think the dollar was down 130 on the day. That's a really big move. Came back to settle not too far off of unchanged and getting hit a little bit this morning. So Ryland said it best before we got on that this is one of the, these are going to be some of the bigger macro days that we see where there's a lot of outside influence that could be driving our markets. But ultimately, we've got to go back to a corn number that's 10% stocks to use-ish, a soybean number that's declining. We're creating some uncertainty, and some technicals for both that appear really, really solid. So we've mentioned numerous times that turns on these markets can be difficult. I think corn has turned, at least for the interim, until we see some solid results of safrinha, where we're headed there. If it is wet down there, we're going to push that safrinha crop back, the planting. So I think we're into a period where optimism is maybe warranted a little bit for some of these grain prices. I think wheat is still undervalued. I look around at the grain complex and it sticks out to me like a sore thumb, being as short as managed money is there versus being trimmed up and long in corn and soybeans. And the fundamental situation for wheat is not at all one where I think that they're going to get a big push lower in order to reward that position from here. So we'll see how things shake out this week, but we're getting off to a good start. And I've got corn kind of sitting at or through like first level that I perceive as resistance. And then you go back to where we topped out back in the spring in corn, and that's the 96, 97 area. So it would really be great to see us push through that. I don't think it happens today, but it would be great if we get through that. I think you're going to continue to embolden participation here. So
thanks for that, Ben. Yeah, Ryland, piggybacking off that, you talked a little bit about it being this day of macros, right? With being this day of observations. Anything to add on top of Ben's comments there?
Well, yeah, I mean, just like Ben said, I mean, it's going to be kind of money flipping all over the place today. I mean, I think just one of the bigger focuses right now is just going to be on some of the details on some of these executive orders. I know the meat markets are going to be curious, especially about, if there's going to be this 25% tariff put on Canada and Mexico February 1st. I know that's been teased. So there's been a lot of watching at the dollar, the Mexican peso, anything that's really going to impact kind of the macro picture, I think, going on forward here. I mean, obviously, we've seen the managed money kind of flip around, just like Ben was talking about, and now kind of at a long position in grains and in the livestock. So overall, I mean, like good news for us. I mean, it just seems like there is a lot of doubt, I think, about the sustainability of the kind of trajectory we're seeing, but there are going to be some milestones. I think do we have option expiration here, Ben, coming up here on Friday?
Yeah, we have Feb going on.
It's Feb options, so it's kind of in the middle of things, and March expiration is going to be next month. So, I mean, there still seems like a lot of time before the money actually has to do something, just from a first notice day kind of standpoint, before we have to start worrying about getting basis contracts rolled or sold. It's just that kind of what it feels like in my opinion. So yeah, I think there's going to be a lot of headline trade watching here as far as grain goes, and especially on the weather in South America, just because it doesn't seem like that's much of a layup right now. We know that Brazil's wet, and we know Argentina's got some smatterings, but still leaning on the drier side. So it just kind of feels like everybody's very optimistic. Maybe, I don't know if this reflects the next 4 years, but I do think that's just kind of the general tone in just about everything today for the most part.
Yeah. And, I look at the corn market in particular, and we've had a tremendous run. I would not rule out at all a pretty good pullback at some point. You most likely are going to have, if that happens in the next 3 or 4 weeks, I think you're going to have some buyers lined up sub 70 to buy corn, kind of where we broke out from. So, grain's kind of standing on their own a little bit here, which is really, gives me a lot of optimism. I would love to see new crop corn get in the game a little bit more, and I think that one of the paths that we can do that is a stronger bean market and make Nov 25, make corn work a little bit back there on the new crop. So.
Yeah, what are your thoughts? Like, I just looking at the trade, I mean, D's 25, new crop corn is just kind of dead in the water here. I mean, why are we only focused on the March? How is that not taking up new crop prices at all? I mean, we're starting to see new crop beans really react, but new crop corn just seems kind of stagnant right now. I mean, I don't get it.
I think it's two things. I think you have the trade that has been working really well for people is to be bull spread, old crop, new crop. I think the producer has probably got, I don't think it's probably, but they're definitely less bushels to market there versus the 25. It feels like it's maybe you've got enough grower selling above the market in 25 to keep a little bit more of a lid on it. And it's timing. We don't have a threat today to new crop corn. We haven't planted it yet, but people are pretty optimistic with tight stocks to use that we've got some leeway in corn. So I would think that somewhere in here, corn starts to maybe consolidate and trade a little sideways for a little bit. But again, as long as you're making new highs, you just kind of give it some room.
Do you think with crude oil being so weak, drill baby drill, as Trump said yesterday, kind of corn's upside being with oil almost down $2 last night?
Brian, we spent years discussing this with crude oil and ethanol, and I don't know that anyone has a real, a correlation. I'm sure Dustin could put something up, but early on in the ethanol boom, it was the biggest no-brainer trade in the world. If ethanol was higher, if crude was higher, that you would buy corn, right? They work as a tandem for the first few years of that. And I kind of look at it now as, lower crude prices means we're not going to stifle gas demand, which means we're going to use as much ethanol as we can. So it's worked different ways at different times. I don't think we're in a position yet where we're going to shut anyone down. A lot of the ethanol demand is mandated. One of the things that, you could look at this as supportive is taking away government subsidies to electrical vehicles. That maybe what looked like a stagnant sector is now going to have a little bit of a tailwind, and that's not going to steal some of our thunder from ethanol additives. So.
Gotcha. No, thanks for that, guys. Brian, did you have anything else you wanted to throw in there before we shift over to livestock?
Yeah, just just piggybacking on what Ben and Ryland said. Yeah, South America, Brazil, ag rural came out that soybean harvest is only at 1.7%. The slowest pace is all the rain they've been getting since 2010, 2011. So something to keep an eye on for sure. And Argentina is still got a little bit of rain, but 6 to 10 is looking pretty dry still. So that'll keep us definitely like volatility. It's going to be here to stay, I think, for the next 6 months or so.
Yeah, and that's kind of a typical old trader adage is, when managed money gets long, you probably want to be long some volatility, and when they get short, you probably want to be short some volatility. And I know a few guys that did really well with that mindset for a lot of years as options traders. So
certainly. With that, without further ado, Ryland, let's talk the meat market.
Yeah, well, cattle market was just kind of mixed here on Friday. It seems like you just couldn't quite muster a lot of strength here in the tail end of the week. Just kind of an inside trade. February, some of the moving averages are still pretty far down there, coming in at 193.40-ish. So I think the trade's just a little cautious. We got cattle on feed coming up here. I think everybody's dying to see how the market reacts to that, how the placement's kind of shaped up last month. So overall, just we did see that the beef markets were a little bit lower here on Monday. And there may just be a little bit of cautious trade because it doesn't seem like there's going to be a lot of new fundamental news to trade today, just being Tuesday. But I think overall the optimism is still there. Cash market seems to still stay on fire. The feeder market on fire. It just feels like the futures are kind of hitting a wall right now a little bit. Like we talked about earlier, the tariff situation on Mexico and Canada, if this isn't stated on February 1st. We'll see if there's, any kind of agricultural implications on that side. But right now, I think the feeder market is kind of focused on if the border is going to open up to let more imports of feeders start to come in. It seems like there's been a shortfall. Prices in the cash market have been exploding. So that could create a little bit of relief if the border opens up. But on the other hand, what impact is the tariff going to have? So I think there's just a kind of a wait and see mentality right now. And overall, the trade is pretty optimistic. Managed money is still near record long in the cattle side of things, 147,000 contracts. Their record long would be 154. So we'll see if they want to push it up to there, if not improve that number, as we get some news here after the cattle on feed report. And hogs look like they're kind of turning lower here. See, like they hit the wall past couple of days. You saw new lows for the move. At least some of the fundamental aspects are starting to show a little bit of support here. But it just seems like we're still seeing some liquidation from the record longs. I think there is going to be a little bit more caution with the macro trade with what we're seeing. But, overall, the news wasn't too bad coming into the day. So we'll see how it all kind of shapes up here.
Thanks for that, Ryland. Looks like we just hit the open. Ryland, do you have opening numbers?
Yeah, I do. So it looks like March corn's up 4.5 right here at 489. March beans up 25 at 10.59, and March wheat 550 up 11.25.
Excellent. Well, thank you guys for that. As always, guys, feel free to subscribe to the AgYield YouTube channel where we have exclusive content. We're meeting every day, talking about the markets, doing some other content pieces as well. It really helps us out with the YouTube algorithm, and it lets you get to AgYield content as quickly as possible. So thanks again to everyone who does tune in on a daily basis. We can't do it without you. Thank you very much. As always, we are streaming live every day that the markets are open on X, Facebook Live, YouTube Live. Thanks again for everyone's thoughts and comments today. Stay warm out there across the Midwest, and we'll talk to you tomorrow. Thanks.
Sure.
Take care.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.